Hi everyone, and welcome back to my final morning report Charter Pros on Tuesday, the 22nd of March, with me, Rich Perry, market analyst at Hantech Markets. Well, we've had this terrorism or potential terrorism attack in Brussels, and we've had a shift into safe haven plays, and that means gold has benefited. And it jumped in early, sort of $15 actually. Had this green candle, big green hourly candle, retraced that candle, interestingly enough, and many of the markets actually have retraced the initial reaction, the initial knee-jerk reaction from that move. Generally speaking, I'd still say that this chart is fairly messy, and a messy chart doesn't make for a strong trend. And that is, I think, what's playing out. We're still seeing this bearish divergence in the momentum, and a very messy period of trading over the past 3 weeks. Really, three bearish candles in a row, and again we've seen a bit of a sort of a move higher. I wouldn't necessarily trust that as a move higher. I think ultimately, I think it's going to be sort of topping out. We could see it, as I said yesterday, we could see a retest of the highs. 1270 was the reaction high that we got last week. Came in in post the Fed, really. That was the big Fed candle. Sort of settled down, had another leg higher, but then just subsequently fell over again, really, didn't it? You've not really seen, I don't think, too much buying appetite. Obviously, we've got this sort of Brussels event still to play out in the markets. I've been talking about these pivot levels. 1247.50 played a pretty good pivot level again yesterday, providing the ceiling. Broken out today. It could provide the initial floor, to be fair. So that's something that we need to watch out for. But obviously 1247.50 is initial level. Also, you've got 1240.75 as the reaction low from yesterday, and then 1237 being another strong pivot level near term. But all these pivot levels are still, I think, playing out. 1255 initially broke out, but then we're back below it, and interestingly enough, in the last sort of hour, that has provided the basis of resistance again for this current candle that we're trading in, 1255. So I think all these pivots are still playing out near term as sort of interesting turning points in the market or consolidation areas. So keep an eye on them. The initial reaction high 1260, you could argue, is also an old pivot. 1260.60 was the really old breakout high that sort of became a level, a bit of a pivot level. Sort of zoom out a bit more, you can see that 1260.60 high there became a bit of a pivot level subsequently, and again seems to have come back in again. So these old levels are sort of still watched by the market, and the fact that gold has turned back lower again from 1255 I don't think is necessarily to be ignored either. So 1247 comes back into play as your sort of support area. 1240 was yesterday's low, and 1237 after that. But as I said, I'm still not convinced by this gold chart. It is pretty choppy, pretty messy, but I'm still looking at these bearish divergences on the momentum, thinking that this is ultimately going to be a topping out of the chart. So I wish you good luck in your trading today, and good luck to all the people in Brussels as well. So I'll speak to you again tomorrow. Thank you.